Picture a courtroom drama where the defendant is repeatedly overlooked by jurors, then delivers the closing argument that makes everyone gasp. That's AMD lately, oddly underowned by active fund managers, yet heaped with bullish analyst forecasts, fresh strategic partnerships, and a narrative about grabbing share in the hottest markets, AI and high-performance computing. Unusual position, what's going on? The weird mix of being overlooked and loved. AMD finds itself in an odd, almost cinematic, place. It's being forecast for strong sales and upgraded by big analysts, while also becoming one of the least-owned semiconductor names among active fund managers. In plain English, Wall Street strategists and sell-side analysts are saying, "This looks great," while many active portfolio managers are keeping their distance. That mismatch creates a tension, supply of positive research, but limited demand from the managers who typically drive big re-ratings. Why does that matter? Ownership by active managers can fuel rallies. When dozens of managers decide to add a stock, buying flows raise prices, which then attracts more buyers. If AMD is underowned, it means a lot of that potential buying fuel is currently missing, which can mute short-term rallies even when fundamentals and analyst views are improving. But the flip side, if some of those managers rotate back in, upside can be larger than for an already crowded trade. Least owned. Explained, not an insult, a technical metric. It's data, not an opinionated roast. When analysts say AMD is least owned, they're not calling it a loser. This comes from surveys and portfolio weighting data showing a lower percentage of active funds include AMD compared with other S&P 500 semiconductor names. Bank of America's data shows the active ownership rate has dropped considerably, for example, from higher levels last year down to roughly around 20% in recent reports, and commentators have labeled AMD as among the most underowned chip stocks. It's a structural observation: fewer active managers hold it, or they hold materially smaller weights than peers. Imagine a concert hall where the front rows, fund managers, are largely empty while critics in the balcony, analysts, keep writing rave reviews. The critics can change opinions fast, but until the front rows fill, the live crowd noise, i.e., buying pressure, stays muted. Analysts projecting strong sales growth, the bullish chorus. Sell-side optimism is loud and increasingly specific. Despite the underownership, analysts project meaningful growth for AMD. Research notes and recent analyst updates have raised price targets and argued AMD stands to benefit from surging AI demand and data center spending. Bank of America, among others, has been explicit in raising targets and maintaining a buy stance, forecasting robust shipments of data center GPUs and optimistic revenue trends as AI infrastructure spending expands. Some reports project AMD shipping hundreds of millions of dollars of data center GPUs per quarter in periods of high demand. Think of this like a sports scout saying, "This player's metrics are unreal," even while many teams haven't signed the player yet. The analyst numbers imply real revenue upside if the demand curve continues. Bank of America's view, the next best AI vendor thesis. A major bank gives the nod and explains why. Bank of America has been particularly vocal, calling AMD a top AI vendor candidate, and keeping a buy rating with raised price targets during recent coverage. Their thesis rests on a few pillars: AMD's growing capability in data center GPUs, the hardware that trains and runs AI models, the company's diversified product stack, CPUs and GPUs, and the potential to capture share as hyperscalers and cloud providers diversify their supplier base. Buffett's messaging essentially says, even if NVIDIA is the dominant force, AMD is the credible next best beneficiary of AI infrastructure growth. If NVIDIA is the headline rock band, AMD is the excellent supporting act that suddenly starts selling out its own shows, and the critics are starting to say the opening act could headline some venues on their own. The IBM partnership, quantum-centric supercomputing, big brain energy. Not just GPUs. AMD wants to ride the quantum plus classical wave. In a strategic play that reads like sci-fi meeting enterprise ID, AMD and IBM announced a partnership to develop quantum-centric supercomputing architectures. The idea: blend AMD's classical high-performance components, CPUs, GPUs, and FPGAs, with IBM's quantum systems to build hybrid platforms that tackle problems neither approach can solve alone. IBM's press release and multiple tech outlets covered this as a roadmap to integrate quantum processors into practical workflows for drug discovery, materials simulation, and other complex algorithms. A demonstration of hybrid workflows is planned, and both sides emphasize open-source tooling to accelerate developer adoption. Imagine a chef, classical HPC, and a pastry wizard, quantum, working together. The chef prepares complex sauces at scale. The pastry wizard does the molecular trickery for textures. Together they produce a dish neither could alone. That's hybrid quantum classical computing. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me. Hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Why that IBM news matters beyond headline flair. This isn't just PR, it's strategic positioning for the long run. First, it signals AMD's intent to be more than a GPU vendor. It wants to be a platform integrator across the next wave of computing paradigms. Second, partnerships like this help AMD get a seat at future architectures, research labs, national supercomputing centers, and enterprise HPC buyers might prefer vendors that can offer integrated, proven hybrid solutions. Third, even if quantum production machines remain some years away, the collaboration accelerates software and workflow development, which is often the gating factor for real-world adoption. Consequence: partnerships can change expectations about future TAM, total addressable market, and help justify premium multiples if progress converts into tangible wins. Note this as well. Do you want forgiveness of sins? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. If we fully obey the Lord, the Creator of heaven and earth, and carefully follow all His commandments, He has promised to set us high above all the nations of the earth. Deuteronomy 28. We shall be blessed when we come in and when we go out. I appeal to you to accept God and let Him be your guide, for He will never leave you nor forsake you. Do not be afraid, do not be discouraged. Deuteronomy 31 verse 8. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful content. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Faith and prayer will do what no power on earth can accomplish. See you in the next video by God's mercy.